Hey, what's up everybody? I'm Sam Parker with My Credit Guy Credit Restoration, and this is the first installment in a video series that we're calling Making Credit Common Knowledge, a series dedicated to making sure that homeowners understand the do's and don'ts in the credit scoring world when it comes to home ownership. Okay, so today what we're going to cover is the top 5 things for clients to not do during the home buying process to make sure that you don't run into any bumps in the road when it comes to your credit. Okay, so number 1, paying off collections. A lot of clients go out and they think that they're going to increase their credit scores or just put themselves in a better situation by paying off collections, when in reality, you're doing the opposite. Paying off a collection will drop the credit scores because you're doing what's called updating the date of last activity on a negative account. Basically, you're refreshing a negative account. I'm not saying to not take care of those debts sooner or later, but first of all, now may not be the time. And if it is the time, make sure that you're consulting with your loan officer or with a credit professional like myself so that we make sure that you're doing it in a manner that's going to increase those scores instead of decrease them. Okay. Number 2, using credit cards. I don't think that you should really be doing it at all, if at all possible, but you definitely need to utilize them correctly. Meaning, I always tell my clients, keep your credit cards at least below 50%. If they're over 50% right now, you got to get those paid down. Ideally, we want them at 30% or below. And if you want to be an A+ student, make sure to get those paid down below 10%. The more you pay your credit cards down, the higher your credit scores are going to go. Okay. Now, number 3 is don't close out credit cards. So like I talked about in number 2, pay those things down. But if you go and you pay those off, close those out, that's actually going to crush your credit score because you're going to lose all the positive pay history that you've built up over however many years you've been paying on that card. So when you pay a card off, it's not just that going forward you don't get any more credit. It's that they go back, let's say you've had that card open for the last 5 or 10 years. They go back and they take all those years of positive pay history and throw it out the window. And you just lost them, and now your credit scores are going to plummet. So make sure that you don't close anything out, just pay them down. Number 4, don't finance anything during this process. First things first, your home loan. You're about to make the biggest purchase of your life or refinance so that you can save yourself or your family, hopefully, hundreds of dollars each month. The last thing that you need to do is worry about getting new furniture, new electronics, or going out and buying a new car. Again, first things first, get qualified for that home loan, because if you go out and you add a new debt load onto your credit report and add a brand new, even a positive account, if it's an installment account, your scores are going to go down and you might not qualify for that home loan anymore. So don't go out and finance anything. Plus, then that way you're not adding any new inquiries as well. And number 5, and the biggest thing, don't add any new late pays. Pay all your bills on time. Make sure that you're paying extra close attention to all of your minimum payments to all your bills during this time. Because if you add even one new late pay during this program, during the home loan program, you're probably not going to qualify for the home loan anymore because your score is going to drop so much. And there are banks out there, a lot of them, where if you add even one new late pay, they're going to have to wait 12 months before they can finance you again. So just don't add any new late pays. Pay attention to everything you're doing. So again, to recap, number 5 is don't pay off any collections. Number 4, make sure that you're using your credit cards the way that they need to be used, keeping them down below 50% and ideally down below 30%. Number 3, don't close any credit cards out during this process. Number 2, don't finance anything. You can wait until after you've signed on the dotted line for the home loan before you go out and you purchase anything new. And number 1, pay your bills on time. No new late pays. Now, over the next 5 weeks, I'm going to be going back and going over each one of these top 5 things so that you understand not only to not do them, but why you don't do them, how it works out with the credit scoring algorithm and all that good stuff. And then that way you're really going to start to get an understanding of your credit, because again, we want to make credit common knowledge. So make sure that you're not only subscribing to the YouTube channel that this video is being played on, but go to mycreditguy.com and then you'll be able to subscribe through there. So that way you're going to get email notifications. Plus there's a whole bunch of other useful things on that website, again, at mycreditguy.com. If you need us, you know where to find us. My information is right here. We'd be happy to help you out in any way possible. My name is Sam Parker with My Credit Guy, and thank you so much for your time.